Welcome everyone. How we doing? Hope we all had a good day. J3 Rudy, how we doing? I'm doing pretty good. Good day for me. Just a couple of few trades earlier and then went outside for the rest of the day. How'd you all do? Nice, dude. Love to hear it. Definitely some money to be made today on both sides, Nice drops. Big push in the morning, downtrend all afternoon. I mean, that thing is paying. This is the only thing I was watching. This is what I was bummed I missed. Any of these shorts into close, just that tiny risk up to that was worth it. Perfect, Kevin, 3%. Love to hear it. That 3% adds up pretty big by the end of the year. That's for dang sure. Nah, John, I wasn't saying nothing yet. Nice, Scotty. Sometimes that's the best thing you can do is just walk away when things aren't going your way. Go find something else to do. And that's always gonna help protect the port a little bit. It's best to not put on risk when things aren't working. Yeah, we set some new highs. Set new highs today. The main thing that I was taking note of is if we, when we, uh, this is the main thing that I was taking note of was we set new highs and then we got clobbered on selling pressure all day long. I mean, like from early in the day, hour, 20 minutes into the day or whatever, we were, selling pressure was stronger than buying pressure for the rest of the day. So, this could be the start of a nice little pullback. Not, I wouldn't be looking for anything major. We're actually going to talk a little about this in a little bit. Not saying we get all the way back down to this 524. But for me, I'm not looking like short, uh, you know, I'm still in dip buying mode, as everybody should be, in my opinion. But I would love to see a dip down kind of back to these previous all-time highs that we had. I think those are all-time highs. I don't remember. Yeah. Previous all-time highs that we had back here. Because nice place to get long, that's what I want. Yeah, Scotty, that is some real good advice. When you got inspectors, you gotta be careful of what you're doing. Yeah, but anywhere down to this 524 area, I mean, really, you could honestly kind of like, if you were really trying to like look for like a nice ideal pullback area to be getting in, I'd be looking for something like this. Take the early stab up here at this 524, look for this little tiny gap fill, you know, I mean, it is a gap, but who cares? It's like 30 cents, 20 cents, whatever. You know, don't really care about that gap fill. But that would be the next place to be looking to add, really, with just stops below it, you know, so you're only going to have a buck or so of risk on the trade. But we're seeing some nice moves out of things. Google was one that you know, we've been talking a lot about. Google finally ended up doing that big old breakout that we wanted it to do. So Google new all-time highs. And then just some of these other names. Meta is one that I've actually really had my eyes on. Obviously, you know, big gap down off of that earnings. I'm in shares on it. Not many shares or anything. But finally getting this nice push back up. I was hoping we weren't going to have, you know, this type of trading as we came back to the bottom of the range. But we'll see if Meta wants to keep doing a little bit of pushing for us. Apple, obviously big standout right now, huge move off its, well, you know, I mean, over 25 bucks, but that is absolutely gigantic for something like Apple. So, you know, there's still some things that might need a little cool off, but for sure could have a bit more upside left in them. But we'll give this a couple more minutes. Welcome everybody. Happy to have you. See quite a few more in you getting in here. Thanks for being here. Hope we all had some good days today. How'd everybody do? Nice, made some money on eBay. Love to hear it. Yeah, that thing I actually pulled up that chart. That thing rejected. Oops, posted in the wrong tab. Thing rejected basically exactly where you would expect it to today. You know, this was the only thing that I was really watching on eBay right here. You know, just for how I trade, I don't, you know, until breakouts come, I don't like to get in there on, I don't like to get in there early personally, but nice little rejection on that thing today. But nice move for all you guys that were in that trade. I'm sure those things had to be up 30, 40%. Nice, Travis. That's a sick 10%. Love that. J3. Well, that's kind of my answer for the upside on eBay tomorrow. And I don't want to talk about this trade because somebody else has an alert running on it. I do believe he said he's all out. That's what he said on trade floor. But you know, I don't want to talk about this just because there is an alert running. But I can say that this basically reached the highs where I would expect it to reach, and I would personally no longer be long until you get that break. But that's just for how I trade. You know, there's a million different ways to trade correctly. That's just for me. You know, we're looking a little triple toppy up here. No denying some strong buying since that earnings, but I just don't like getting long up here towards the tops of ranges. I would rather be short. I mean, I don't know. You know, I don't know. I don't use Twitter, so I don't really see what goes on Twitter personally. But I mean, if you have a good following, and you know, people are following your trades, I do think that you have a bit of a responsibility to at least, you know, make mentions of what's going on. You know, if you're in a trade, I know there's this terrible guy a bunch of people follow, and he's been short for like on SPY. We can look at SPY. Terrible guy, a bunch of people follow. He's been short this whole run basically on like, you know, couple day out SPX puts just getting obliterated. So I do think that on Twitter, you know, it's worth it for people to, if people follow you, then you do have a responsibility. Like I'll even do it in my tab, you know, for the few people who are catching those trades with me. You know, man, I'll post about the same trade 3 or 4 times, but it's because I want people to know what I'm doing, you know. I'm not on Twitter all day long being like, short this thing because it's overbought and it needs a pullback. You know, I'm just trading the chart in front of me. And so I want to show people the charts that I see. You know, same as trade floor, I get asked all the time, you know, oh, what do you think of this? Will you know, send me a chart on this? And I just give my opinion, for right or wrong, you know, I can just say what I see personally. Okay, well, got that other post in there. Welcome everybody. Great to have you here. Thanks for showing up, Dirty River. We are going to be talking support and resistance tonight. You know, everybody uses it. You know, it doesn't matter if you just do traditional support and resistance, things like flips and I do, or maybe you call it supply and demand, maybe you call it something else. You know, there's all kinds of crazy names, but it all comes back to support and resistance. This is one that people always talk about, oh, retail strategies, whatever it is, blah, blah, blah. It doesn't matter if you're a retail trader all the way up to the most big time crazy algos. They know where things happen on the chart. And so we as retail traders, at least in my opinion, really need to take advantage of support and resistance. It's places where, you know, the market makes volatile reactions. And for most of us in here, and of course there's some share traders, but for most of us in here, we're trading derivatives, we're trading options. And one thing about an option, you guys hear me preach it all the time, entry is everything and volatility is everything. Don't get me wrong, I love to scalp little, 15, 10 to 20% moves, whatever it is on SPY, 10 to 20% contract moves, obviously not SPY. I love to scalp those, but for the most part, we as derivative traders need to be looking for the best entry that will give us possible volatility. Because as anybody who knows who sat in a same day or a weekly for too long, you might get a really nice move, but if your entry was bad, that nice move might not pay you much. And so that's something, for those of us that day trade, those of us that scalp, flips, me, I mean, Empanada, Tilia to some extent, those of us that are really into, faster trades, support and resistance is pretty crucial. Support and resistance is interesting because it doesn't necessarily mean a price level. Sometimes your support is an EMA, or sometimes your resistance is VWAP, or whatever it may be. But it's, identifying places on the chart where you think you will have volatility. Okay, so actually, I got to back up a little bit before I get into that. For anybody who doesn't know, anybody that didn't see my post tonight or didn't read the post. So starting now, we're going to do, and I did this before, and the reason that I don't think, well, it worked great. People always learn. But I was doing a lot of covering of lectures there for a couple of months. And so I think that when you're trying to learn something, trading is not the type of thing where you sit down for a day or you study for 3 days or whatever it may be, and you just have it down. I like to, and it's, I've traded for a while and I still study things all the time. I still read new things all the time. I like to, read something, learn something, maybe try to watch it on the charts a little bit for a week, 2 weeks, whatever it may be, and see what I think about it. And that's, that's what I'm going to try to do for all of you and try to show you how I trade. And so I think it'll be about 9 classes, ideally once a week if I'm not covering any classes, where we're going to go, in depth on something that I think is important, something that I use every single day. Obviously we're starting with support and resistance because to me it is, it is the bread and butter. It is the backbone. It is the most crucial part of all trading for anybody. You don't need any indicators. You don't need nothing. You just want to slap, you slap a couple of levels on there and you are already ahead of other people. And so, then we'll go into trading trends. We'll go into indicators that I use, reading volume, reading price action, trading in ranges, all of the things that all of the things that I look for personally. Again, I'm not trying to tell you I'm the best trader around. I just like to trade. And so all I want to do is I want to show you all that, everybody wants to make things difficult. They want to do, oh, I got these Elliott waves. I got ICT. I got blah, blah, blah. I like simple. I like something that anybody can learn. I always say trading is super easy. We are what makes it hard, and don't feel bad on yourself if you aren't quite successful or anything like that yet. It takes time, but once you kind of have just some repeatable things that you do over and over and over again, you'll start to realize, hey, I can do this, and so that's why I like, that's what I like to teach. You guys know, I mean, God, most of you DM me all the time. You tag me with questions on Tradeflow. I love that, and so that's why I love getting these classes where we can talk a little bit more, we can get some input from all of you, and we can just kind of talk about, how I do it. Again, am I the best? No. Do sometimes I tell people don't take that trade and it pays huge? Yeah, I mean that's everybody. That's trading. That's just the way it is. But we're gonna kind of go through, whatever I said, maybe 7 to 9 classes, something like that, and just kind of go over what I do. And then the ideal goal at the end of all of this is I'll be able to pin it in my tab, and you guys will be able to go through go through my tab. Oh, I need to brush up on support and resistance. Oh, I'm trading EMAs. What did River say about EMAs? Whether you agree with it or disagree with it, you can at least see how I trade around them. And so that's what we're going to get started on today. Like I said, first class of the new session, new series on it all, and starting with support and resistance. To me, the most important part of all trading, and especially day traders, support and resistance is crucial to us. And so we're going to kind of cover, just to get into it, we're going to kind of cover the two main types of support and resistance that I look at. As most of you know, my levels, like if you follow my tab at all, you'll see when I post charts, they're the exact same levels every single day, because those are levels I've pulled off the daily, which we're going to get into, these longer time frames. Those are levels that I pulled off the daily. And so they don't change. We know this level is important. Like this level is important. It will be important. Even, back when we were, when we had the big pullback 2022, we were trading levels from 2019, 2020, whatever it was, we were trading down to those levels that still work. And so daily levels tend to continue working virtually indefinitely. Of course, if you zoom out, sometimes you'll find things, just here's an example, like we might have looked at this and said, oh, I think this level is going to be important. And we did reject it. And then one day we just bought all the way through it. I mean, I don't know what caused this move, but we can see that, it rejected, and then we finally moved, so we just want to identify places like that where things happen. That's what I like to do with, my main long time frame analysis. That's what I like to start at the longer time frames and work to the shorter time frames. Because I do this, that's why you'll frequently see in my tab, if we come up to a level like this, I'm shorting it. I'm not longing it until it breaks. It's kind of even like that eBay trade again, for me, I mean, we'll just use it because it's a prime example. For me and how I trade, I don't buy calls up here, because it's rejected, it's rejected, it's rejected, it's rejected. So to me, I want to look for it to push up and short it. That's just how I trade. Then if I want to catch the breakout, I wait for the break of 53 to pull back to it. So if I get long here, my stop is just below me. Whereas if you get long down here, you really need to have your stop, 10, 20, 30, 40 cents below you on these previous candles. So I like those very low risk trades. That's what I look for. And how do I find those kinds of things? It is all support and resistance. And so we're going to start, as I said, with the main type that I use, the longer time frame stuff. And then we're going to get into identifying levels on shorter time frames. Because, sometimes when we're in a trade, or maybe I mention a trade in my tab, or I mention it in trade floor, we aren't near one of my levels. And so sometimes I'll get a question of, why did you enter right there? And frequently I'm going to say something like, look at the hourly, look at the 4-hour. And, a daily candle is interesting because it shows us a lot of information. There's tons of data in here. We know where where people won on the day and people lost on the day. We know all of that. However, we don't get to see what, like yesterday, we see a big green candle, but we don't know what happened. And where did we slow down? Because this candle didn't just go up and then stop and then stay there. Where did we slow down? And so that's what we're going to get into in the second half of this, is identifying some of those shorter time frame levels. I frequently don't chart them. I more just take a mental note of them. But we're going to talk about how to identify them. And if you don't want to take the mental note, then I mean, 2 clicks and you got a line on your chart. That's all it takes if that's what you want to do. And so it kind of looks like we got a lot of things. I better look at these. Yep, Dan, first session today. Luigi, nice to have you. Rudy, thank you. Oh, Papa Elon, OG in here. Thank you for being here. Man, all kinds of people. Johnny, thank you. Raphael, my man, thank you. Um, oh yeah, I don't know about that attorney. I mean, I'm a degen. I'm a degen, don't you worry. Man, Raphael, those fibs hit. Those fibs hit. I mean, this was like, it's always funny when you post something. We posted the fibs back here, and man, look at where like our consolidations on our rejections and like, man, yeah, those things hit. Those things hit. Okay, anyway, back to, oh no, I think I was on blank. We'll see. So here we go. Jay, good question. On the price. So click over here. At least on Thinkorswim, you can move them this way. Or if you're looking for the date, because sometimes people send me their charts and they're all clumped up like this, you know. I like it, you know, I like it taking up the whole screen. I want to see the whole thing. So just down here on the dates or over here on the prices. Appreciate that, Luigi. Dang, we got Sushi MMA Joe in here too. Thank you, everybody. Okay, with that, support and resistance, let's get rolling. So as I said for me, uh, so fib extension, we'll just cover this. We will get there. So right down here, I like to click on this thing. You can also right click and go to drawing tools. But for those, this was the fib extension. So this, for anybody, and you know, this isn't support and resistance, but for anybody who wants to see how I did that, what I did and what a fib extension is, and they can be a wonderful tool. And I'm only going to kind of touch on these because they're helpful right now. Because they're very helpful at all-time highs. When you have no levels, when you have none of that, you know, when we look at the chart, we have no data up here. Doesn't matter how far back we go, we have no data up here. So you can do your whole numbers, your 530s, your 535s, your 540s, but sometimes you want a little bit more accuracy. And you want some levels to actually trade around. And so Fibonacci's not only a retrace, a retrace you'll use, you know, say you take a nice move up and you're looking for a small rejection down, you know, some sort of 50% retrace, you might hear people say, for a place to potentially buy calls, obviously the other way too, you sell off big, you're looking for a bounce up to reshort it, can be great. Well, what I did yesterday, you know, we had relatively good, you know, it depends how you look at it, but good CPI data. Markets wanted that good data. You know, we didn't even sell for a second on it. And so we have no levels up here. So all I did, and this is again just down here, the little percent sign with the uppy, you know, it's got an up going on. I just did from the low down here to the high up here. So this was our CPI move. And then you get these levels up here. And so what these are telling you is this is measured. And so from here to here, this is 23.6% of this same distance. So when we move up to this 100%, that is the 100% move up. It's not that specific, but that means you have doubled the move. A little bit more than that is with how Fibonacci math works. But that's why people will frequently, even I did it yesterday, we scalped some calls from here to here. And then once we got up to this 50, I was done. I wasn't looking long anymore. I, of course, ultimately ended up being wrong. We pushed in that after hours and broke above it. But when you've got a 50% push and you've had no substantial pullback, you typically want to be a little bit careful. So there you go, quick rundown on how I did those fibs yesterday. And again, they don't always work like that, but they worked yesterday. But here we go, support and resistance. And this is how again, you know, I personally do it, how I identify things on the chart, the levels that I really care about. And you know, they're the ones where I'm going to be exiting most of my position, or you know, if we're breaking above it, I'm going to be looking to take a position, you know, or if we reject it, I'm going the opposite way of the trend or whatever it is. And so how I do that, the main things that I'm going to look for, I always describe as major highs. So where did we hit a high and reject? I want to look for any of those. Sometimes it's as simple as this, we just talked about these little ones. Sometimes when you have a market, I won't necessarily say this market is ranging like from, because we technically moved up like 15 bucks here, but it was a slow grind, $1.50 a day for a couple of weeks. I still will take note of things where, maybe we had a few candles push up, took a nice sell. This is another level that I'm going to care about. Again, when we ultimately break it, we take a nice move up. So I'm always going to take note of things like this, where we push up and we reject down. And then again, just looking at these major highs. Then once we have a few major high levels, and you can see this, people love to talk about like my charts can get a little cluttered, no denying, I have some levels on them. But they're spread out. We got 4 levels in a $14 range on SPY. We know there's a lot more than that. Well, the other side that I look for is now I look for major lows. So anywhere where we sold and we took a nice bounce. Even this one, we sold, ultimately took a nice bounce. It's only 2 candles, but we took a real nice bounce. Again, down here, big sell down to here, nice rip off of here, which as I talk about all the time, 1K, he's great at telling people to do it. When you start looking left, well, look, we had some pretty major lows over here and over here. We had some, at one point, what were major highs that turned into some lows and ultimately provided support for us. This is when people were chasing the SPY short saying we were going down to 480, 475. If you started looking left, you saw this is where the market decided, are we ready to break out? Ultimately broke out. You can kind of assume when you get back down here trading, the market is going to say, are we ready to break back down? And in this situation, we weren't. The other thing you want to take note of, still major lows. Where did we sell down to and hit a bounce? Where did we sell down to and hit a big bounce? It worked here too. I mean, this one didn't work on this candle, but we can see. So obviously this is SPY. Obviously we're trading at all-time highs. So there's going to be more levels depending how the market moves. If we continue to go left, we can start to say major highs, lows, lows, highs, lows, and just work through these. You don't want to wind up with a super cluttered chart, obviously. But as we look right here, we have 9 levels in basically a $30 range on SPY. You, me, everybody knows that there is more levels than that. In a $30 move on SPY, there's a whole lot more levels than that. We don't just want to go through and mark every single high, every single low, everything like that. Really, we could slap this one on here. But you don't want to mark all of them. You just want to have some levels in your mind that goes back to kind of what I was discussing in the beginning of you want levels that will potentially provide you volatility. We've seen it a lot, in recent markets where, we're getting, days like this clobber people. Days like this where we take a big sell. I mean, sure, you can get in on the nice short, but this is a 50-cent range. People get clobbered on these kinds of days. So you want to wait until those more important, let's see if we can go a little bit more than this. You want to wait until those more important levels come into play. A lot of chop here. People got chopped up for 3 days. However, if we had just been looking back, waiting for our levels from the daily to trade, well, we broke above it, sold below it, broke above it, came down close enough that you can take the 10-cent risk when you get this close. And if you were nice, patient, waited for that level to break, bought a little bit of time, then in the end, you ultimately ended up catching a $13 move. Obviously, because we went way up to 531 from the breakdown here. I'm not saying you want to swing all that. I'm not saying hold SPY calls, but for 5 days through chop. But start to finish, you ultimately could have caught a $13 run in a week. So just wait for those levels. Same as here. This is what I talked about when I trust my levels I find on the daily. So if we buy up to this level, I'm definitely looking short. I want to be short here. I don't want to be long here. Again, I want to be short here. And hopefully I get blown out. Yeah. Well, it basically opened right where it closed, but you want to be short until you're getting confirmation of breaking. And I'm not talking these little tiny candles 10 cents above it that are barely holding it. You want some confirmation of a breakout, as we discussed here. Big buying, small pullback where the selling is drying up. This is where you want to start, entering, looking to trade. And again, all of these levels, they come from the daily. I get all my levels on all my charts the exact same way. It doesn't matter if it's SPY, it doesn't matter if it's QQQ, it doesn't matter, Apple, Amazon, I mean, even Nvidia, whatever you trade, you can find these levels all the same way. I trade SPY. I see a couple of people asking me about it. Yep, sushi, those are the fib levels. Those we talked fib extensions. That's what I was showing there. The other ones is a retrace. The other one is a retrace. Thanks for the kind words. Dan, I won't say I only trade SPY, but I mostly trade SPY. And I want to point out it's what I like. It's what I like to trade. For most people, it's not good for you. I mean, it is volatile. Especially now you're talking to $500 stock, $530 stock. It's very, very easy for it to move $1, $1.50, which on those shorter expirations, $1.50 move can clobber you on a weekly, so you want to be careful. SPY is just what I like to trade. I'm one of those people that's very lucky that I don't really battle emotions. If I got to stop out, I got to stop out. I mean, I had one, and man, we were on a heater in the tab. We were like 12 for 12 or something. But then I took a stop the other day for $4. That ended up, those contracts ultimately ended up paying 50%, 55% like that. But I took the stop out for $4 because that is where the plan was, so I stop out. I don't care. I click the sell button for a loss all the time if it's not going to work. That's just what that's how I like to trade. So SPY, because I don't battle that greed, is good for me. If you are a person that finds yourself being greedy, maybe holding a little longer than you should on some stop outs, then I highly recommend you trade those things like, Apple, Amazon, Google. They're a little bit cheaper. They're still blue chip. They're still relatively high beta stocks, so they'll put in a nice move, and they pay plenty, but they aren't gonna make those like like they Apple's not going to do this to you. Apple is not going to take a ripper and a dipper and destroy your contracts if you aren't on it quick, But I like this little bit of mayhem. SPY is extremely difficult to trade. It's the hardest thing on the market to trade effectively. Most people avoid it. A lot of people think that you're just, guessing when you're trading it, which I get it. If you haven't put in the time to learn it, it's mayhem. But we're talking about SPY because everybody watches it. So that's kind of what we're going over tonight. But again, just these nice daily levels, trade around them. Yep. Love to trade SPY. Yeah, Luigi, I mean, dude, you're right. I don't trade. I don't, I don't, I trade, I trade SPY and QQQ most of the time. I trade AT&T a lot. I trade Coca-Cola. I trade Apple, Amazon, Google. And man, I'll hit Teslas, I'll hit Nvidias, but for the main ones that I like to trade, it's basically SPY, QQQ, Apple, Amazon, Google, AT&T. Those are my go-tos. They have trades provided every single day. And so, those people who are trying to trade 50 different stocks, they're the ones that are always just chasing things and never, never really learning anything really well. I mean, one of the best examples in here, I don't know if we got Mad Flips in here tonight, but Mad Flips trading AMD. Mad Flips trades AMD 90% of days. He trades that thing all the time. He knows how it moves. He is a wonderful example of learning a stock, and I mean, God, like we all, even, we even joke about it that like AMD listens to flips, I mean, he's traded it so much that he just knows how it moves. And the only way to get like that is sitting and watching it and charting it and trading things. And so that's what, I like SPY. So that's what I've done with SPY for a decade or whatever, Let's see. What percent was my stop? Never base a, I personally never base a stop on a percent. It will always be based on a level, you know, or EMA or whatever it is, a support and resistance in some form. John, so good question. I think I know what you mean. You're saying like, so you're saying that we buy spy calls here because we break above it. And I'm going to try to follow down there and do it. You know, we buy spy calls here because we break above it. You're saying, do I hold all the way to here because that is my next resistance? No, I do not. You know, you need to, that's where we're going to get into next, talking about shorter time frame things that can act as support, resistance, whatever it may be. And trimming at those targets and taking things at those targets. And you know, something like SPY, if your trade plan is to get in at 517 and run it to 524, it's a very bad trade plan. You should never go, you know, of course you want to catch them, but you should never go looking for the $7 move on SPY. If you get it, awesome, congratulations. But no, you need to always be looking left. And you know, if we enter these here, well, I probably want to be trimming because we took a big reject here at this 519. Or I definitely want to be trimming here. We took a big reject off of here. You know, you always want to be looking left for your levels to choose from. How do you learn to trade at Eagle? Sit and stare at it. Yeah, exactly, Raphael. And I mean, dude, that's for, you know, all of us have those. All of us that trade a lot. And like mine's AT&T, you know, like I mean, yesterday, I have very few levels on AT&T. So I shorted 1740, caught a nice move down, terrible liquidity in those contracts. When we sold this morning, I looked at this and said, my stop is a nickel below me, 1710. So I took the risk on some, you know, next week 17.5s. I swung a lot of them, you know, because they're cheap and these contracts are safe. And so I almost always have an AT&T trade of some sort riding because I like to trade them, you know. Okay, so we're going back to SPY. So we have our big daily you know, we have our big daily levels. We know all of that. I really, as I was talking about this, I actually put this one on here because that was crucial in the end. We have our big levels that we care about. So these are the levels that we know if we're trading around them intraday, then we're able to, you know, base our trades around them. You know, like we said, if we go to these shorter time frame things, you know, even this breakout pull back to here, you can risk this, you know, 30-40 cent stop below you. You know, you can, you know, that's something. Oh, and I actually, so that's something I got to backpedal a little bit. I meant to say this in the very beginning. You know, levels, we put them on here. They aren't, and sometimes they are, you know, but they aren't to the cent. You know, my buddy Shark in here, he's, you know, unfortunately he's just busy these days and just can't be as active as he used to be, but he's, you know, one of the best traders that I've ever met. He had the best description ever for support and resistance. When you look at him, squint your eyes. You know, we can have 524.70 on this chart, you know, but maybe we bounce at 524.60. Maybe we bounce at 524.80. You know, we just want to know an area. You know, of course, sometimes it's to the penny. It's not always going to be the penny. Frequently, you're going to get things like this that look like a little bit of a breakout, you know, and you got to widen that stop 10, 15, 20 cents below there, whatever it is. And you know, if you're long trying to play a bounce here, you got to widen that stop a little bit. You don't want to have your hard stop at 520.80 because you got a level at 520.82. You want to say, I'm looking for, you know, increased seller volume closing below my level, which if we, you know, if we just for fun, we can go into this day, we can see that actually seller volume was decreasing. We had one little pickup on a doji, but seller volume was decreasing as we were breaking down. So those are the kinds of things you look for around a level. Well, when you're trading, like I said, you don't want to enter at 520.80 and have your target be 524 because that's just unrealistic. And so then what I like to do is, like I said, start looking left on the chart. And so we're going to go to a shorter time frame. And I like to go I like to start on the 4 hour. Because this kind of goes back to what I was talking about on the daily. You don't get super detailed information because you don't get to see how the candles played out. And then on the daily candle, you don't get any of the after hours data. You don't get to see these moves that are made in after hours, which frequently can be important. And so when I'm trading, I always go to the shorter time frames. And we didn't see this here. When we were looking on the daily, we didn't see this nice double top right here. But when we zoom in, we do see a very, very nice double top. And so I'm going to put a little, we're going to put a circle here. So what I would do is if this was, and this is hindsight trading. I always like to give this disclaimer. We're going back and looking at charts when we're doing this. So we get to pretend that we're amazing and we would have done this and we would have traded everything right. The real world, it doesn't work like that. This is what we get to do hindsight so we can learn and maybe do this earlier. So we're going to pretend that we were trading on this day, but we only had this one level right here. We had this 520.82, but we didn't really know anywhere else to look. So we go back here. Oh, we have a double top. Another thing we might take note of, oh, we rejected pretty heavy in the pre-market right here. So now we kind of have a nice little zone to trade around that's more realistic than this 520.82 all the way up to this 520.82 all the way up to 524.70. So if we zoom in, we get to go back here and say, okay, here is our range from our double top. Market has made a nice move on this day. Here's our little range from our double top. I just want to put that there so we'd find it again. Here's our little range from our double top. Even set up a little double top right here. Well, we break above it. So how do we use support and resistance here that we found on the 4 hour? Well, we know this is our zone. So now we get to say, this is our entry. We've broken above it. Our stop, right down here. And now we have already defined using support and resistance. We knew, maybe our entry was down here long. And so we got this whole move. We know this is about where we want to get out. We've seen the hesitation here. We've seen the hesitation here. So maybe we want to trim, or maybe we missed this whole move, but we want to get in without chasing. Well, you don't ever want to buy calls here because this is buying calls at resistance. You hear a lot of us joke about it. Don't buy calls at resistance. Don't buy calls at the tops of big green candles. Me and Flip say it all the time. That's chasing. So you have to have a plan to enter on something like this. We know that this was our little zone that we found from support and resistance. If we zoom in more, we've broken above it. Now, you don't want to just buy the top of this candle. You want to look for any sort of pullback down into here. All the way down to 522.34. The closer you get to here, the smaller your risk is. But when we do this, we now know, okay, here is our entry target. Here is our stop out. And where do we track from here? Ideally, we run it all the way up to this next level. Obviously this is a very nice scalp. You catch it, got $1.50, $2 rip into close, you're sitting pretty happy. But maybe this is a longer term trade. You're looking to get to this 524. Well, you're going to do the same thing. Oh yeah, we can't because we gapped over it. But you're going to do the same thing. If we were going into tomorrow, we would still say on our swing trade, this is going to be our hard stop. And where did we reject on this day? Right here. So, and it unfortunately doesn't work. Well, who cares if it works or doesn't work? But we go forward and it ultimately ends up being the launch pad for that CPI move. But we know this is where we couldn't push past the day before. So any dips down to here, again, setting us up for a buy. Or, if you swung CPI, you made a bunch of money. Good job. But that is what I look for on any sort of shorter time frame. I love looking at the 4 hour. The other one is like if you have something, this is kind of support and resistance, but 4 hour trends that break out or you pull back to them. Those kinds of things, wonderful, and still act like support and resistance, obviously. But that is how I find all of my support and resistance levels. One more thing that I wanted to touch on here, and then we got pretty good time. I was hoping by the end of this, I'd be able to take a couple of questions from people, not only on support and resistance, but maybe on some charts. We can chart some other support and resistance to just kind of go over it. But the one other thing that I want to take note of, and I'm actually gonna remove these just for confusion's sake, uh, the other thing that I always want to point out, and that I get, people ask me about this a lot, not questioning me, but curious why I do it. You might have noticed that all of my support and resistance, when I mark them, are on the wick. I will always be trying to mark these levels on wicks. As you can see, sometimes they can end up being, the bodies hold them, but this was marked off of this wick. And so I get asked, why mark the wick? Why not mark the body? And I won't say that, because on the body of the candle, this is the open of the candle. This body is the close of the candle. I won't say that those levels aren't important, but why I personally care more about the wick is it goes back to what I've been saying. We want our levels to give us potential volatility. You don't want levels in the middle of nowhere where you've just had unpredictable reactions off of it. You want levels that, when broken, explode, when reject, sell heavy. Like that's what you want your levels to do. And so the reason that I mark them on the wicks, and why I mark them at these major lows, or I mark them near these major highs, is because that's where one side lost. This candle right here is a really, really prime example. Uh, at one point, this was an extremely bearish candle. This was a big red bearish candle down $5 on the day or whatever, that ultimately ended up ripping upside. So I want to know, where did the sellers lose? And right down here is where the sellers lost. This is where sellers ultimately gave up and buyers showed up and won. On the other side of it, right up here, at one point, this was a nice green candle looking like it was going to break out, that ultimately rejected. So to me, I am much more interested in up here, because this is where buyers lost. This is where the buyers ultimately gave up and we sold. We can even see it today, obviously, and who knows if we're going back there tomorrow or anything like that, but this is an all-time high, an intraday all-time high, 531.32. That's where they gave up. This is where the buyers ultimately gave up after a nice couple of day run, and in the end, ultimately sold us about $3 or whatever it was. And so I want to know, where did that occur? And so that's one of the reasons I love the daily time frame, is we get to see these areas where buyers or sellers lost. And where those things happen are typically where you can get the volatile fast movement. And most of like, I do swing trade, but I'm much less into, I don't like swing trading as much, because you're so at the whim of the market. You don't know what's going to happen overnight. You don't know those kinds of things. And so I like to just wait for those levels to hit. And in an ideal world, my trades provide enough volatility intraday where I don't have to take them home. If I want to take the trade home overnight, I want to swing it, whatever, then great. Ideally, I have had enough volatility leading into it, because I entered at support, or I entered at a resistance rejection, or whatever it is, where I'm able to trim a lot of that position and end up, in a free position, or at least a great, maybe I got 5 contracts. Well, if I trim out of 3 of them at 20%, now I can swing those other 2 and they can get pretty dang beat up, because I have paid for 60% total of one contract. So they can get pretty dang beat up and I can still walk away from the trade green. That's why you always hear me preaching, you'll see it in my tab. Every trade that is in my tab, I'll be telling you, I'm trimming at 15%, 20%, whatever it may be. And to me, that's just the safest, best way to do it personally. And so that's like I said, all my major levels are coming off of the daily time frame. Any of those shorter time frame ones, I mean, you can even, we talked 4 hour, you can even take note of just intraday levels. Flips does this type of trading a lot. He'll say, maybe we have this level up here. Maybe he's riding calls and he might enter on this little flag, but he's going to say, wait for 522.40 to break. And then I will look for calls because you're getting the breakout. And that's all just from, previous places on the chart. And you can find those kinds of things every single day, oh, we rejected here. Well, when we're buying up to it, you should be looking to short here because the risk reward is risk 10 cents of upside for a 60-cent move down, or buy calls, hope you get the breakout that will give you 40 cents with a 60-cent stop. That kind of trading just doesn't work. Support and resistance, one of the best uses for it is it designates your risk reward before you're in the trade. So the closer you can enter to these levels, you want to play the 520.80 bounce, the closer you can be buying calls right here, the better. The people who got in early, not as happy. The people who thought this bounce was going to hold, not as happy. The people who just waited, risking 10 cents a downside and catching the nice little bounce are happy. But on the other side, the trade doesn't work. The most important part of it is your stop is tight. You're only going to lose 5, 10, 15% of the contract if this breaks down. If you entered up here, you lose 30%. So it's all about just patiently waiting for those levels to come into play. And as I said, support and resistance, we're talking price levels tonight. Maybe your support or resistance is an EMA, maybe it's a VWAP, maybe it's a fib, maybe it's a B band, maybe it's all of these, other tools we have at our disposal. But we're just talking good old-fashioned support and resistance based on price levels tonight. Let's see. Oh, we got a couple of questions. Rudy, so when you're trading these types of levels, good question. How much time do you want to buy? I base time entirely on how long I think the trade is going to take. If I'm buying calls right down here to try to catch a volatile bounce, not up to any major level, merely just to some previous highs, I'm only going to go, same days or the next day contract out. However, if I'm big picture trading, I'm seeing, this 4-hour breakout, I'm looking for this dip to here, and I am trying to catch, at least the highs up here or potentially this next level, then I'm going to be at least a week and a half out because, people greatly underestimate theta, and, you might be up whatever it is, 30% here. Well, you need a gap up the next day just to sustain that 30%. And the less time you have, the bigger a gap up you need. So it all comes down to trade plan. If you're looking for quick, volatile scalp off a level, you only need a couple of days at most. Even all the way to same days if you want to take that risk on, but your entry is crucial if in the same day. But then on the other hand, if you're looking for a bigger move, you kind of widen out that stop a little bit, you buy yourself some time. So as long as you're catching that momentum, you're catching that breakout, you can stay in the trade and keep making profit. This buy and sell volume is one I got it pinned in my tab. It's under, I think it's labeled assassin volume, I think. And Assassin's a guy in here. He's unbelievable at algo stuff, and he made that a while back, and I use it all the time. Oh, Jay already told you. Raphael, let's see. So you're talking, where was I talking that pullback dip by? I don't remember where we were talking. Oh, that's the 1 minute too. Where were we talking pullback dip by? Oh, it could have been even like this one. Any pullback like this that you're trying to buy the dip here, you just want to buy it around here. And then you really want to say, stop under any candle close under these previous lows is going to be your stop. Same as something like this one. Dips down, you're going to get a nice little entry here. But you could have been talking about the trade off that little zone. So yeah, and I don't, we can go back to the 4-hour and we can find that little zone again. Here's our nice little zone we got here. And then we go to this one. So right here, I'm assuming now that I think about it, this is likely the candle you were talking about. So you want the pullback. You want, and this is just an ideal world. This isn't like saying buy calls every time there's a red candle, buy puts every time there's a green candle. You ideally want a strong push that you see a pullback. This one is nice. It comes down and, like it's like you said, it comes back about 50% of the candle. And you get a little bit of a red candle. That's the type of pullback you want to buy. A lot of the time for my trades, I wait for candle closes, but sometimes you'll miss the entry. I'm not going to be entering it here 30 cents above where I wanted to enter it. But I'll feel a lot more comfortable entering here, knowing that I've even tightened up my stop by doing that. So this is going to be more of a mid candle entry on that pullback to take the entry. And then this, I mean, I'm willing to bet if we had an EMA, we also got a pullback into the EMA here and here. I obviously don't have them on, but those are other pulls back. Sometimes a pullback is sideways. Sometimes it's actually a red candle that retraces a little bit or a green candle that retraces a little bit, whatever it is. Do I adjust my levels? No, nope. You got to leave them. You got to leave them. A level is a level because of where it was. Like I said a little bit earlier, they're rarely going to be to the cent. Sometimes they are, sometimes they aren't. But your level is your level because of where that candle was. You don't want to just be like, oh, it actually rejected a little bit higher, so I'm going to move it. Just leave it where it is. Yeah, CT, that's exactly what I do. I mean, 90% of my trades are based off of daily levels, and levels and trends, and then intraday trends. I mean, of course, you have to take note of major trends, and I'll always take a bounce. But I love trades like this where we've sold down to support, we've bounced, we've attempted to break, failed, broke with a nice little retest on it. That's where I would look to enter calls. You could hit them here to the trend, you could hit them here, you could take another nice push up here. And all of those are really effective entries. I appreciate it, Jay. Our pullbacks usually based on one candle. No, a pullback can be one candle. It can be 10 candles. It all depends on time frame. Maybe you're a long-term trader, so you're looking at 4-hour pullback candles. Well, that's only one pullback for you looking to the bounce here. Well, if you're a short time frame trader, those 5 minutes, maybe your pullback is like this one is one little candle of pullback. It just depends on the trade. It depends on the time frame. Sometimes they actually pull back. Sometimes they go sideways. Sometimes they kind of go down and sideways. That's a flag. That's why I don't call them flags. I call it consolidation typically. And so, pullbacks can be long, short. It doesn't matter. It's all, what is the chart telling you? Like we can see this. This is a sell-off with technically a pullback up to the trend with another drop, long pullback down to support. This is 2 hours probably, I'm estimating, but this is probably 2 hours to your support bounce. So they can be any sort of time frame. For swing trades, don't go below the hourly. I mean, the amount of time that I spend in DMs with people and they're in a 3-week out trade and they see a candle like this and they're like, I'm getting out. And I'm like, well, maybe pull up a longer time frame thing and say, are these types of candles going to make you get out? Because they don't make me get out. It's all about just taking big picture into account. If you are a swing trader, you don't care what the 5 minutes doing, the 1 minute, the 15 minute. What are your hourly candles doing? What was your trade plan? We could even use SPY as an example. You buy this hourly breakout. You can say to yourself, oh yeah, my close is an hourly close under this, a 4-hour close, a daily close, whatever it may be. Whatever it may be, then you have to respect it. But if you're a swing trader, you don't care about a 5-minute candle close under some level. I mean, even an hourly close, let those things play out a little bit. As long as your plan is good, let the trade ride if you're swing trade. Again, I do think entry is crucial. If you're realizing that your swing trades are frequently going 30, 40% red before they're going green, then then that's an entry issue. That's not necessarily a trade entry or trading issue. It like your trade's bad, but you just weren't patient enough for a good entry. It goes back to, like when we're trading in a range, I will always wait for the entry at the low of range, wait for the entry at the top of range, as opposed to try to, catch something in the middle for a bounce. But that's just me. I like to keep it simple. How do you take one trade and tame? It's small. I mean, I think 5% of your port is, and it's hard because, don't get me wrong, if you got a $200 port, you aren't gonna find, you know, you aren't gonna find any trade that you want to take for less than, 30, $40. So you can, if your port is very small, you can wind up with a larger percentage than you want. But if you have, a good enough size port, there is no reason to ever have more than, 5% of your port in a trade. And then a lot of it should be risk. If you're looking at a longer term swing trade, maybe you can do 5%. If you're looking for a short intraday scalp, real fast, maybe only do 2.5%. I think it all comes down to the risk that you're willing to take on for the trade. Oh yeah, and Luigi, great answer. I mean, anything over 10 is like you're too heavy. I think 10 is too heavy because you have to figure that if you have 10% of your port and you end up having to stop out on those a couple of times, you can eat away your port super fast, And so 5%, you're doubling the amount of time. So I think that that's why it's generally speaking better. And then again, if you have a very large port, like you got, 100 racks or whatever, you're psycho if you're putting and until you're more experienced, you're psycho if you're putting like 5 or 10% of your port into something with a big port. John, good question. If I think it'll break through, I don't care. Thinking kills you in trading. Get no opinions allowed. That's why, and we're gonna use it just because it's a trade that people were in. Up here, 53, I am on eBay. I am not long. Like, absolutely not. 100%, I will never be long. I don't care if I think it's gonna break out. You zoom out on Ooh, my Wi-Fi is getting a little slow. If you zoom out, whenever this daily loads for me, you zoom out on the daily, you're seeing double tops, you're seeing triple tops. I am never going to be the one that gets in early. I like, well, if the five's gonna load for me, we'll see if we can do it a little bit longer. I'm never going to be the one that gets in early. I never want to be the one that's stuck in a trade at the highs that bought the top. When I look at any sort of range forming, there we go. We got a top here. We got rejection, 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 rejection. I'm not going to be the first one in the trade. I'm not the first buyer. I don't care if I think a breakout is coming. I don't buy up here. I short up here. And we can see, it's not obviously always going to work like this. They attempted, ultimately failed. This candle right here, beautiful short entry. Your stop is 7 cents above you. Your contracts would go like $3 red, but they ultimately probably, I bet you some weekly eBays if there was any, volume to those things or open interest so you could actually trade them. This is a giant trade right here. And so I don't buy in middle of ranges or, anywhere in here, I'm not a buyer. I'll wait till up here to short it. Anywhere down here, I'm not shorting it. If we've broken back in, I'm looking for any pullback to here to buy. A good starting port size, 0 paper trade until you have like a nice little, you got a nice little method that's kind of repeatable. You have, what I always try to tell people is make up 5 or 6 rules for your trades. If you always adhere to those rules, you'll start to do good, like very, very good, very, very fast. I know everybody wants to put risk on and people want to say, oh, I need to lose money to learn, which okay. But I mean, start trading with a 3, 4, $500 port, one contract at a time, never more than, $40 or whatever in a trade and find consistency. And that's the best way to do it. Do I know anything in the mastermind class? I actually do not. I have been left completely in the dark on that one. So I really don't know what's going on. I think it's mostly going to be Tilio and Flips kind of doing like a month-long teaching thing. I'm not really sure. Um, Probably going to be an unbelievable opportunity for the people who sign up. I'm real happy for them. John, what do you mean? Yeah, for intraday levels, still, I'm not their first buyer. I'm not. I am never. Let me rephrase that. So down here, um, we have our trend, and we're again. This is look back trading. Oh, I see it's 6 o'clock. We got a few people trickling out. Thank you so much. We had great attendance tonight. High 60s. That's awesome. Thank you so much for taking time out of your day. I appreciate you being here, listening to me. And we'll see y'all tomorrow, Friday. Trade safe. But we got time for a couple more questions. So right here we have a trend. I'll buy calls here because we've pulled back to support. So I am a buyer of calls here and I'm an exiter of my entire trade right here because that's the move I'm looking for. I don't want to, I don't care about being the one to catch the breakout trade. I want the easy trade. That's the high probability trade. Then if we have this attempted break, we have this attempted break, maybe I look for another entry here. But I want to take the easy trade and I want to be out. I don't want to plan on the breakout because sure, maybe we can look at it back here. We pull back to support, great entry. We push up, reject. Now we have a trend. Well, you don't want to be the person that's holding calls saying, oh, yeah, we're going to go. You want to exit here. You want to be exiting your long here on the chance that we pull back to support. So I don't ever want to be the first one in. I want to wait for that little bit of confirmation to actually, be able to take a safe, smart trade. And maybe this is your entry, maybe this is your entry. I don't love those. I want to see, us getting, now we got a candle opening outside of the trend. Now I put the risk on and I say I'm buying calls here. I'm stopping out on any sort of, high seller volume here. So very, very tiny risk. And that's it. And then I do, we'll get into this in later lectures. I'm big on statistics. So if I do see something where, the statistic in the market is 80% of breakouts fail, and that's just real life statistics. That's just what it is through all of history. That's the statistic. So you don't want to be the person trying to catch the first attempt or the second attempt or the third attempt. But we start coming to that fourth attempt, fifth attempt. That's when you can start saying, hey, maybe we're going to break out. And maybe you missed the big breakout on the second one. But if you sit and wait for those third, fourth, fifth attempts, you will start to do a whole lot better. What rules do I have for trading? A ton of them. Tons of rules. Depends on the trade, depends on the length of the trade, depends on a lot of things. Maybe my trade, I'm only following 2 rules to get in. Other times I'm like, I need this to line out with 10 rules for me to like it. Best platform to simulate trading. I like Thinkorswim. I guess I don't know if it's still free through Schwab, but Thinkorswim. I mean, and they also even have on demand where you can go back in time and pretend you're trading through a real day. I think it's the best broker around. Like Webull is just a mess. Robinhood has a fine user interface, but it has nothing to really help you progress as a trader. E-Trade is like a mess. I mean, they have terrible fills. SoFi's horrible to trade on. I mean, for me, if you're trying to trade options and equities, there's no reason to be anywhere but Thinkorswim, at least in my opinion. Yeah, TradingView is fine, but so I have 5 indicators, that I use. You'd have to pay to chart on TradingView to use 5 indicators. And that's just a joke to me. I would never pay just to pay for a program that all I can do is chart. What platform should you use for charting? Again, Thinkorswim. That's the one for me. Download it. I'm pretty sure you can paper trade on there for free. So I highly recommend Thinkorswim. Yep, exactly, Rudy. And that OR break, that's That's obviously a bread and butter for me. OR lows, like these are my real charts that I was, that I trade. Like we're getting breakouts, we're getting consolidations up here on strong days. I'll look to buy those. We're selling to these lows. Yeah, I'm hammering calls. I mean, I'm probably selling early, but heck yeah, I'm hammering calls. Same thing as down here. I'm hammering calls. I'm hammering calls. I'm getting stopped out on calls. And then ultimately breakdowns, short those things. Opening range for me is just the highest high and the lowest low for the first hour and a half. There's all kinds of strategies out there now, the DR, IDR stuff, the orb guy, they all stole it from Al Brooks. And Al Brooks, the statistic on uh uh the statistic on the opening range when you wait an hour and a half into the day is that it's approximately 85 to 90% chance that high or low of day has been set. So if you're down here, and the opening range is being set, then you can the opening range is being set, then you can, at this point, the statistic says there's now a 50-50 chance of a downtrend day or a range trading day. So very low probability to bounce. We're closing down here on the lows on opening range. Look for, bounces to short or scalp in a range. Yeah, Rudy, that hourly 20 is just like a cheat code. No, I don't trade the ARB, Dan, because it's a worse version than what Al Brooks teaches. But when I do my next opening range class, you will hear me talk all about it. Yeah, let's see. What's some trades I took today? Just for fun. We can pull them up. I took very few trades today, just for reference. First one I took was this volatile wick that got bought back up above all these EMAs, tested the hourly 20, went back above the fib level because we don't really have levels, and 530. This was my entry on calls there, fully out at the 100%, obviously pushed way up here. Next one, I don't even quite remember what I did on the next one. Oh, I think I took this breakout bounce up to here, and then shorted. This candle here is where the OR was set, was fully out here. Took this exit, obviously sold a little bit more. And then the next trade that I took was actually on this bounce up, and this one's kind of a weird one. But we had this reducing volume. We were now trending down. We had all the, EMAs all starting to curl down. Even with these bounces, we were getting curls down. So I actually took a short entry on this candle, saw a little bit of money, sold it on this candle. It's actually, if we went, this is like super sad. So took the short entry, got this rejection down. I think it was this one. Is that the right one? Yeah, got this rejection down, sold here. This is the 1 minute, obviously. Next one, absolutely dumped. So I sold for 30%. They were up 90% on the next candle. And then I think I called it a day. So those are my 3 trades for the day. And this one was just, nice consolidation. Obviously, buy here, we were setting higher lows, strong buying off the open, increasing buyer volume, holding all EMAs, holding that VWAP, holding that trend. Stop would have been tight just below me. Obviously, this is the break and retest right here to catch that scalp up. Opening range set as the high. Being well above the 100% extension, you got to kind of expect some sort of pullback off of there. And so that's what I did. Again, stops would have just been over that high. Nice, simple one. And then this one was the only riskier one because really, you enter here, but your stop needs to be over the trend. So this was wide, a wider stop than I would normally like. But with the selling pressure we were seeing, I was expecting a little bit of a sell-off. That was about it. As far as determining direction, we're gonna have to do that one in another class when we talk trade and trends. Am I in voice chat ever? Much less than I used to be. Flips and Empanada pretty well hold that down these days, but I was the voice chat guy for 3 years, 2 years before them. I was in voice chat when Mad Flips just started trading, and he used to be like quiet. It was awesome. It's hilarious looking back on it. TTM squeeze is fine. I don't use it. It's good. It can give you a hint that momentum is coming, but it's not going to tell you anything that volume can't tell you. And then I don't need an indicator to tell me that something's going sideways, and that's basically what TTM squeeze tells you. Bro, empanada for real, dude. This I still remember one time, dude. I still full on, dude. I had to yell at Flips to speak up because I couldn't hear him. I'm still proud of that day, you know. Well, not if you're on a cash account, Kyle. It's all you know. It's you can unlimited trading with settle funds. Plus, I've been noticing they're settling them funds pretty well instantly. Yeah, Luigi, he ain't quiet now. Oh yeah, I do it all the time. I trade futures the exact same way I trade all this stuff. I mean, you know, stocks are stocks. Treat them all the same. No way. I tell Flips to get louder, man. I love hearing that guy scream. I want him to scream, dude. That's like such a such an important part of it, you know, that uh uh that's voice chat, you know. We need that guy. Yeah, I bet it's not good when you're at work. But yeah, we need him screaming. That's him, you know. That's I love it. That guy came out of his shell. He used to like sit in the background and be like, River, what do you think of meta calls? And yeah, you couldn't even hear him, you know. I couldn't even hear him. And then now look at him now. Love to see it. Okay, well, that's gonna do it. We ran a little late tonight. Thank you all so much for coming. I really enjoyed this one. Awesome questions. I think I saw, man, we had 65 of you. I think I saw at the peak, 66 of you. Love to see that. Thank you so much. You know, I appreciate y'all for being here. You guys are awesome. You guys are awesome. Yeah, Flips is the goat. Everybody tell Flips you love him, dude. That guy deserves it. Right on, Johnny. Happy to have you. Thank you for being here. Scotty, thank you. Thank you. Love seeing your name always. Jay, thanks everybody. Oh, cornbread, my guy. Yep. Okay. Okay, that's going to do it. Thank you all so much. Have a great night. We'll catch you tomorrow, Friday. Trade safe, and we'll see you around. Have a good one.